All right. How about now? It's going to be a delay. Okay. My settings were different this morning. I don't know what's going on with, I don't even have the option to end the video or start it. So usually I start the video, which I didn't do, and I don't have the option to end it. So we'll have to figure out how this is going to work. But good morning, everybody. This is Jack Gleason with Startuptrading.com. It is Tuesday, August 4th, 2020. I've titled this video Dixie Strength, so we'll go over that. There is today really pretty light news event. We're going to have factory orders at 10 a.m. 9:30 out of the Canadian dollar. We have manufacturing PMI. And then this evening, the unemployment rate for the New Zealand dollar. And then really nothing important until this tomorrow. We're going to have Bank of Japan Governor Kuroda speaking and the non-farm employment change at 8:15 a.m. So pretty light news day for all of the markets. I wanted to start off by just looking at the dollar index, which has really been leading, obviously, the currency markets and even most recently gold and silver, and talk about this higher time frame. So we had, coming out of what was the March bottom in the market, the dollar actually gets stronger when the indexes are selling off because people are selling assets, equities, etc., to raise cash, and that money goes into the dollar. So we had this incredible move up higher in the dollar as the market was crashing, and then we had a 50% retracement short that ran completely through our profit targets. Now, what would have been the next traditional never actually traded. We never traded the 50% retracement. You could see there's sellers at that 38.2. There's also, different variations of traditionals you could draw, but what would have been that next 50% retracement completed a negative 61 on Friday, and then the dollar had a very aggressive reversal. So moving forward, after these two traditionals have completed, the most likely resistance level we'll probably eventually run into is going to be that next traditional, which is just the high of June to low, and that's all the way up at 95.17. It's all the way up at 95.17, but the more recent level we will be hitting, and it does need to be validated at this point in time because we have targets that lead us through there. So I do think we'll probably get to that 95.17. I'm going to move some of these alerts down. There was the extension, and it's a 95.70. It's the low from June 10th to low. Go down to an hourly chart. Now, it was just like an hourly sequence here that led us into our lows, and we broke the trend on Friday. We have come into the overnight session right at the European Open. The dollar traded a full halfway back long, and this is literally as perfect of a reaction as you could ask for. And I always like to pay attention to markets that have these types of reactions because they typically are going to run to their profit target. So the profit target is a 94.33 there. It's a 94.33 here for the Dixie. And we have validated that target by breaking out of the full 50% retracement long, and it would be great to get that next halfway back. So that would be ideally the perfect entry after a trend break is the next traditional measured move long. And I wanted to go over that. We will go over other currencies towards the end of this video. We'll move on to the S&P 500 first. So now, if you look at this, this is just a giant wedge pattern. That's what it's looking like, right? So we have, basically right into the third touch of the trend line. And even at the bottom here, we had a little bit of a wedge formation. So if we were going to continue in this wedge formation, it's possible that over the next 2 days we get down towards the bottom. Now, if you looked at what was interesting about last week is the halfway back long for the week did not hold. We did not hold that halfway back long, but there was still profit taking at that negative 23% profit target. On a higher time frame, if we could get all the way down there, possibly tomorrow, I think Perry's S4 level was down here near this 32.40 level, 32 I don't remember what his exact level, but 32.44.5 is just the halfway back for this range. Whether or not that comes into play today, it is to be determined. But what we'll want to pay attention to is just the previous sequences that have worked here on the way up. Now, out of the reversal of Friday, there was this traditional that totally blew through targets. And then Sunday night, uh-oh, I'm frozen on my thinkorswim. Come on, there we are. Then Sunday night, we had our first extension. We had our first extension Sunday night. That extension completed through our profit targets, and at the close, we held a brand new extension. That is the extension we had failed from. So that's a sequence failure. We had of our next measured move short after that. So the 50% retracement short, right now going into the open, if we gyrate higher, 32.84 quarter is going to line up with the extension target. It's an old target. It was the target going into the Monday's open at 32.84. So we have a 50% retracement. We have an old profit target there going into the day. Now, I would anticipate we at least come down into the same anchor new high, the 50% retracement, and that would be the first level of support at 32.6375. A move up into 32.84 would target at that level as well. But if we do not hold and do not get a reaction off 32.6375, there's the possibility that we get all the way down to the 32.44s in the coming days, which is just that higher time frame halfway back long. Moving on to the Dow. All of these markets were in very similar situations. The Dow is the most bearish market. It really just didn't get up into those new highs. We had the full 50% retracement break yesterday. So we have the halfway back long from the lows of Thursday to high. Did you guys lose my audio, or do you guys still have it? Looked like it was mute there, but that would be down at 26,280. And I would want to. It's coming back. Yeah, it looked like I muted there for a moment. That is the negative 61. Ideally speaking, this would be a really solid level of support that I'd like in the Dow. Now, we have an hourly leg start here from Monday. Okay, that's where our bid began. Assuming we hold this traditional short, we have a negative 61. So I know Perry talked about potentially having to sell off in the morning because we do have all of the bulls trapped from yesterday, but then a reversal in the afternoon. Ideally, this is a trade location I'm looking for a potential long here in the Dow, and it's the 26,280 with the first halfway back short at 26,559. The NASDAQ, our strongest market, we had this traditional Friday. This next traditional is all I'm looking for. That traditional in the NASDAQ blew through targets and we began that new extension. That new extension has broke. I'm not going to draw short in the NASDAQ at this point in time, but if we do trade up to that 78% retracement and the rest of the markets are seeing weak, that's about the only thing. Just basically looking for like a double top situation as opposed to selling a 50. But really where I'm interested in the NQ is this 10,891. That's the level to be patient for. Very clean traditional completion. And that next traditional brings us back to where we were closing on Friday. The consolidation, that is the ideal trade location for me. Moving on to oil, which oil had a 50% retracement initially on Thursday. Now, our highs yesterday were at negative 61, and then in the room, we had a traditional to an extension. That traditional to extension traded its 38% retracement. It reacted, made one more new high, then broke the long setup. We then traded a short. That short has moved to its profit target. We have also pierced that next traditional long here. So the only thing I'm going to just draw up here is the full halfway back short from highs, which is a 40.69, and the full halfway back long from the lows of last week, which is a 39.98. So 39.98 for the support that I'm looking at in CL, and 40.69. Ideally, I'd like to see 40.69 trade here first. The USDJPY. Now this is where we're going to get into the currencies and kind of talk about how they relate with the dollar. But the USDJPY is inside of a very big extension long. With the reversal Friday in the dollar, the USDJPY ended up having a traditional halfway back long that was front run totally through targets, and then we had a traditional into an extension. The 50% retracement is a 105.64. We traded that. We rotated all the way to the top. We came back down. 105.82 is a 38% retracement. There was a bid at the European Open, 3 a.m. in the morning. 105.83 was that low, and we've rotated here. So we're just inside of this extension long with an upside target of a 106.79. 106.79. The Aussie dollar basically looks inverse of the actual dollar. It is a full 50% retracement short from Friday's high to low, and we are bearish below with 71.68. Bearish below 71.68. 71.51 is our resistance level. Any retest of that, I would consider valid still. The euro, also pretty inverse of the dollar. We had a full 50% retracement short from the highs of Friday to low. The downside target is a 116.45. This 117.22 is a support level that keeps catching a bid. That is a daily extension, 38% retracement. I'm going to have to go out a bit. But this is where I see this market kind of moving back and forth between. There's an extension from the high of June 10th to high, but I think we'll trade the 50 before we move higher. We'll just have to watch the price action. But that's been a perfect reaction here in the euro. We have broken out of the long setup, and our next short at 117.63 is valid. 117.63, 50% retracement short in the euro is valid. The pound, same thing. Because the dollar is in a long setup, we had a halfway back short complete, and then yesterday, guys, if you remember, we had that next measured move. We had offers, but all that happened is we just ran all the way up into that next 50% retracement short. We tagged a 61. The downside target is a 129.59. We've had one traditional out of highs, and we're actually inside of an extension here. It's gone once to target. That same anchor new low, the 50% retracement would be a 130.13, and its downside target lines up with a higher time frame. I also believe we have some pound news on Wednesday. That's pretty important. The USDCAD, it's kind of gyrating here at the bottom of this range. We have this, at this point in time, I'm going to put back this 50% retracement, but we have this sloppy long setup. But if the dollar is getting strong, the USDCAD will as well. So I like the 133.94 area to it's like the halfway back from lows is like right below that 133.89. That is ideally where I would like to take a position to the long side. Now the USDCAD's been a little weaker. We did make a new low, but you can see since this morning, look at the price action. This is really aggressive price action alongside 1, 2, 3, 4. This is the fifth green hourly bar. Okay, we always want to pay attention to the most recent move that is of significance. In this case, we have an hourly leg start that's gone 5 bars up. The halfway back after something like that is what I like to pay attention to. And then moving on to gold. Now, the interesting thing about gold and silver is even when the dollar is strong, that hasn't necessarily accelerated or made gold and silver really fall, because gold and silver are all of the currencies of the world are falling against gold and silver, and then it's just the currencies against each other kind of doing the gyration. Now, if it's kind of just shows you how strong gold is when the dollar's up and gold is up, because they're supposed to be correlated, right? When the dollar goes up, gold's supposed to go down. When the dollar goes down, gold goes up faster. Okay, to be clear, when the dollar goes down, gold goes up faster, but gold can still go up when the dollar goes up as well. And we are continuing to hold this technical series, and we have nothing but upside targets here. And gold really should only be traded to the long side. We have a halfway back target at 2021. We have another one at 2017, and then we have another one just at 1997. Now, if we can take out the highs here of the overnight session, the low from 7 a.m. to high will be the next traditional. And you can actually, I believe we've actually already bid off of that here. This is micro, but it's already tested. So there's, if you're not in that trade, there's nothing really to do. What I'd like to see is us complete. Yesterday, guys, we had the 1982 support level. That still hasn't hit target. I mean, it's going nowhere yet. But when it does, we'll have that next measured move. And then silver, same thing. Even if the dollar stays strong, silver can stay strong too. And I just have a couple of variations of support. We are most likely going to be in a consolidation here in silver. You can see there is a lot of rejection above 25. And still, until we start getting some daily closes above 25, I don't see silver really. We had this incredibly aggressive move, the breakouts that we had in late July or mid-July. That type of move we're not going to see until we tick out the highs, which are still much above us. This is going to be a consolidation for some time, but it's a consolidation with the bullish bias. The low of Thursday to high has been front run once and twice here, and we are just a little bit in a range below 24.62. Now, if we can break out of the 50% retracement short, trade up to 24.90, there will be a very clean long. But at this point in time, this is really choppy action, and you want to focus on the higher time frame support and resistance levels. Silver, I think, is going to be choppy here for a bit. All right. But that wraps up my morning trade plan. A lot of interesting developments here, especially with like the currencies and how aggressive they're moving off that dollar strength, and whether or not that continues, and the fact that we're basically going to be opening the indexes after a bull trap, because we had that consolidation above us. We're gapping below the consolidation, and it's, as Perry has said in his video, which you guys all should watch every day, it's the bears' day to lose. They have control of the price action here this morning for the indexes. But that's going to wrap up my video. I will share my levels with the members of the trade room. Everybody have a wonderful day. Please hit the thumbs up button. And feel free to share this video if anybody might think will find it useful. Take care. Have a wonderful day. Please hit the thumbs up button. And feel free to share this video if anybody might think will find it useful. Take care.